Hey everyone, welcome to another episode of Beyond the Numbers. I've got some exciting news about consumer confidence that's making me feel pretty optimistic about where we're heading.
Is that why you've been doing extra holiday shopping lately, honey?
Oh, you noticed that, did you? But seriously, the numbers are really encouraging. Consumer confidence just hit its highest level in over a year, 111.7, up from 109.6. And before you roll your eyes at the numbers, this actually means something pretty big for everyday people.
You're right. And what I find fascinating is that people are saying it's getting easier to find jobs. The labor market is looking really strong. We're expecting to keep unemployment at around 4.1%, with plenty of new jobs being added each month.
Exactly. And here's what I love. People are feeling less worried about inflation. Remember when we were all panicking about grocery prices last year? Well, both short-term and long-term inflation expectations are coming down.
Speaking of which, the Fed seems to be picking up on this positive vibe too. They're actually talking about possibly cutting interest rates, though they're being pretty cautious about it. It's like they're driving with one foot hovering over the brake, just in case.
That's such a dad analogy, but it makes sense. They've got the rate between 4.5% and 4.75% now. Though I should mention to our listeners that we probably shouldn't expect any dramatic moves in December, especially with all the uncertainty around the new administration's policies.
Oh, absolutely. And you know what's interesting? The market's actually lowered its expectations for a December rate cut. It's now below 60% probability. It's like everyone's holding their breath a little.
Should we talk about what this means for our listeners' everyday finances?
Let's do it. I've got some thoughts about how people can position themselves with these changing rates.
So here's what I think our listeners should focus on with rates potentially coming down next year, but not immediately. It's a great time to look at your debt strategy. Anyone with high interest credit cards might want to consider consolidating now.
Speaking of credit cards, have you seen the drama around Capital One trying to buy Discover for $35 billion? Elizabeth Warren and AOC are not happy about it at all.
Oh my goodness, yes. And I totally get their concerns. It's like when our local grocery stores merged and suddenly we had fewer choices and higher prices. They're worried the same thing could happen with credit cards, especially for folks who don't have perfect credit scores.
Remember when we were first married and building our credit? Those were some interesting times. But speaking of financial companies, PayPal just knocked it out of the park with their earnings minus $1.20 per share, beating expectations by over 11%.
That's impressive. But you know what I find even more interesting? The tech sector shakeup between NVIDIA and AMD. Honey, you've been following this closely. Want to break it down for our listeners?
Oh, you know me and my tech stocks. So here's the deal. NVIDIA has been the golden child, up 180% this year, but it might be getting a bit too expensive at 48 times forward earnings. Meanwhile, AMD is like the smart shopper's alternative at 28 times earnings.
And AMD's got some serious potential in AI, right? I've been reading about their new MI30X chip, giving NVIDIA some real competition.
Exactly. It's like when you found that amazing dupe for your favorite designer handbag. Same quality, better price. Ha ha ha!
I can't believe you brought that up. But speaking of AI, did you see the latest numbers on AI infrastructure spending? We're looking at over $100 billion by 2028, which is just mind-blowing.
The growth in this sector is incredible. In just the first half of this year, companies spent $31.8 billion on AI infrastructure. That's a 37% jump from last year. It's like Black Friday shopping, but for corporations.
Should we talk about what this means for our listeners' investment strategies? Because I'm seeing some really interesting opportunities here.
So here's my take for our listeners. With all this AI spending happening, it's not just about buying tech stocks directly. Think about companies that will benefit from this infrastructure boom. Data centers, chip makers, even energy companies powering all this technology. And speaking of markets, have you been following what's happening with the dollar? It just dropped below 106 on the dollar index, which is pretty significant.
Oh, yes. And this is actually really important for our listeners who are planning any international travel next year. The Treasury yields are down to 4.21% for 2-year bonds. Remember when we were getting those crazy high rates?
You mean when you were obsessively checking your bond yields every morning with your coffee?
Hey, those were exciting times. But seriously, there's something even more interesting happening globally. The whole Russia-China economic situation is getting really complicated with these new U.S. sanctions.
Right? It's like a giant game of economic chess. The sanctions are targeting their financial messaging systems, and according to experts, it could really disrupt Russia-China trade, at least in the short term.
What I find fascinating is how this might affect global trade patterns. For our listeners who invest internationally, these kinds of shifts can create both risks and opportunities. It's like when our favorite coffee shop closed and we had to find new routes to work. Sometimes disruption leads to discovering better alternatives.
Only you could connect international trade to our coffee routine. But you're right. And speaking of alternatives, China is already looking at different payment systems to work around these sanctions.
Okay, let's wrap this up with some practical advice for our listeners. Given everything we've discussed today, from consumer confidence to AI investments to global trade, what's your top tip, honey?
I'd say diversification is key right now. With all these changes happening, potential rate cuts, tech evolution, global trade shifts, you don't want all your eggs in one basket. What about you?
For me, it's about staying informed but not reactive. Yes, there are big changes happening, but that doesn't mean you need to overhaul your entire financial strategy. Make small, thoughtful adjustments based on your personal goals. And maybe keep an eye on those AI-related investments we discussed.
And that's a wrap for today. As always, my brilliant wife keeps us grounded with practical advice while still keeping an eye on the bigger picture.
Thanks, honey, and thank you all for joining us today. Remember, everyone's financial journey is different, so always consider your personal circumstances when making financial decisions.
Exactly. And if you enjoyed today's show, don't forget to subscribe and leave us a comment. We love hearing from all of you.
Until next time, this is Sky.
And Nova wishing you smart money moves and a wonderful week ahead.